done with the homework, students? Done? Show me the notebook. Done? Yesterday we have done with till foreign security, right? That was the last topic. No, we have done with special director's appeal. You haven't written it, right?
I didn't line
And you haven't, even written that distinguish between foreign exchange and foreign security. So how you have written? You have, revised the portion from notes and after that you have written, or what? How you have done it? Yes, yes, please.
I just remember what yesterday said.
Person ka definition was quite very logical, right? So no need necessity to write. You able to recall everything? Para and FEMA difference, that is based on our notes. I have written so many points on that, right? You haven't written everything, right? You haven't completed it. What about you? So hope online students have written the notes properly. Localization simplification. You copied it from notes, or how you have done it? I think I have made you by heart each and every provision over here itself. So don't copy it, okay? And you haven't complete. No, you have completed, right? Repatriation, you have written. Special, foreign exchange, foreign security. You must have written in your own language, right? The next one. Yesterday, I think 2-3 students were not there, right? You are new for today, and he is even new for today, right? You are absolutely. So you have written everything, but you able to recall everything, right? Whatever is being taught yesterday, right?
Had college, so I didn't have enough time.
No worries, beta, no worries. But you have today. I'll take the test, and then I'll get to know that whether you are able to recall it or not. Okay, done. So should we start? Should we start, students? So first of all, I'll give you the quick review of whatever is being taught yesterday. Okay. After covering the last lecture, okay, we'll proceed further with the further topics. Okay, we'll cover further topics. So when it comes to FEMA, FEMA stands for Foreign Exchange Management Act 1999. Which subject I am teaching you is ECIPL. Although yesterday I have covered the quick summary or quick review of each and every 14 chapters, that is the part of your syllabus. That is part A, 60 marks. I have given the quick review of each and every topic and their weightages, right? For that I'll record one lecture so that will be available in recorded way, right, with you students. As of now, I'll only cover the quick review of the FEMA. Okay. So when it comes to FEMA 1999 is applicable. When it comes to FEMA, it is having broad applicability. We cannot say that when it comes to FEMA, it is only going to be, applicable on commercial transactions. Even if you are getting into a non-commercial transaction like personal transactions, like if you want to go for a visit in Dubai, if you want to go for a private trip, or if you want to go for a business trip, or if you want to send your children for education, for the higher education, or if you want to go abroad for medical treatment, if you want to get into export or import, or if you want to make investment outside India, or if you want to bring investments from outside India, if any transaction is involving foreign exchange, if any transaction is involving foreign exchange, what would come up for compliance would be FEMA. Okay, FEMA 1999 is extended to personal transactions as well as commercial transactions. You cannot say that it is a commercial law and it is going to be applicable only on commercial transaction. It is going to be applicable on overall all kind of transaction involving what? Foreign exchange, right? Even when it comes to donation, charities, they are primarily regulated by FICRA, that is Foreign Contribution and Regulation Act 2010. But still, as it involves foreign exchange, somewhere and somehow FEMA provision will become applicable, right? And when it comes to FEMA, earlier the precedent of FEMA was known as FICRA, was known as FERA, right? That is Foreign Exchange Regulation Act 1973. The act was passed in 73 and applied on 74, but it was not matching with the expectation of changing environment. India has come up with a kind of, you know, globalization in 1991, where the government has decided they'll extend their businesses even outside India. They'll get into export and import, they'll get into foreign investments, and because of globalization, liberalization, privatization, the FERA was not capable enough to meet out with the expectations of, you know, changing environment, changing policy. So FERA can be, you know, upgraded by way of amendment, but it could not be possible because of the rigid norms of FERA. That is why FERA has been replaced to FEMA, right? The first reason behind it. The second reason behind it, when it comes to FERA, it was having a very quiet or a conservative approach, like a middle class man or woman, when they are trying to restrict their you know, expenditures rather than focusing on new avenues of income. Now FEMA is not focusing just on controlling the expenditure in terms of foreign exchange. Even they are focusing on generating new avenues of income, so that India would have different sources of income when it comes to foreign exchange. So it is working on overall management of foreign exchange. It is not limited to controlling the expenditure, right? Right, students. When it comes to FEMA, the FERA was having a problem. FERA was not having a special code formed under you know, FERA. When it comes to contraventions of foreign exchange related matters, it was primarily regulated by ordinary courts. If suppose I have contravened the provision of FERA, to whom you have to contact is the ordinary court, right? High Court, Supreme Court, or Court of Sessions, right? Or City Civil Court. And we know when it comes to the judicial burden of these kind of courts, they are quite heavily burdened. So in order to make sure, there should be a special authority provided under, you know, for foreign exchange contraventions. FEMA provides for special judicial bodies, right? There are adjudicating authorities established under FEMA. There are appellate tribunal that has been established under FEMA, right? So it is also dealing with what? Special courts, right? So whatever was the drawback of FERA is being replaced by what? FEMA, right? So FEMA has come up with the overall management of foreign exchange. It is not working on controlling the expenditure. It is not merely working on, you know, how the expenses can be curtailed out. It is working on increasing the source of revenues when it comes to foreign exchange, right? And a permanent authorities has been established under FEMA. Now the FEMA is completely a newest version, which is matching up with the new you know, globalized environment of our country, right? So because of the environmental issues, because of the policy changes, because of the rigidity norms of FERA, because of limited scope of FERA, the FERA has been replaced to FEMA, right? So this is the reason. That was the first question. This question has never been asked by ICSI, but many a times in CA final, they have asked a question on FERA versus FEMA. Okay. Okay, students. So first question we have done is FERA and FEMA. The second question that we have done is, what was the second question, students? FERA and FEMA, and why FEMA has been launched, the subject matter of FEMA, right? Then we have done with one question, that is subject matter of what? FEMA. So when it comes to FEMA, FEMA can be divided into five kinds of provision. The first one is current account transaction. When it comes to current account transaction, they are nothing more than routine nature transaction involving foreign exchange, right? if you're going ahead for medical treatment, or if you're going for education, or if you're getting into export or import, what kind of transactions you are getting in? You are getting into a transaction which is not going to create any asset, or which is not going to create any liability overseas, right? Right, students. What I'm teaching you is content of FEMA. There are 5 content. How many contents are there? 5 contents are there. The first content is current account transaction. The second content is capital account transaction. The third content is recovery of export proceeds, right? The fourth content is about authorized person, and the fifth content is connected with adjudication and penalties. Okay, how many contents are there when it comes to FEMA? 5 contents. The first content is current account transaction. What is current account transaction? Any transaction involving foreign exchange, that is a cross-border transaction, which is not going to create any asset or liability overseas, right? If a transaction would lead to creation of asset or creation of liability outside India or inside India belonging to a person resident outside India, it will be classified as what? Capital account transaction. It is classified as a capital account transaction. What is capital account transaction? Give me some examples of capital account transaction. Give me some examples of capital account transaction. You didn't get the point. Capital. Oh, so what? I have given you a clear idea about capital account transaction. Huh? If you are getting into a transaction which is leading to create an asset or liability overseas, that will be classified as a capital account transaction. Now tell me the example. You tell me. You are not in the class. Are you in the class? Are you in the class now? Are you mentally present in the class? So tell me the example of capital account transaction. What is capital account transaction? Yeah, if you are acquiring a immovable property overseas, right? If you are buying a flat in Dubai, that is a capital account transaction, right? If you are borrowing money from a bank located in Dubai, it is going to create a liability overseas. That is a capital account transaction, right? If you are buying an agriculture land overseas, that is a capital account transaction. If you are making investment outside India, that is a capital account transaction, right? If you are brought in investment from overseas over here in India, that is what? A capital account transaction, right? And capital account transaction is what? It will create a kind of long-term implication on Indian economy, right? If they are coming and making investment over here in India, what they are doing? They are doing FDI, right? Foreign direct investment. And foreign direct investment would lead to what? Foreign direct investment will lead to create employment opportunities over here in India, right? It will be a green signal for an Indian economy, right? It will be a green signal for an Indian economy if the foreigners are getting into a capital account transaction with us, right? Right, students, done. What I'm teaching you is FEMA. FEMA is going to be used in even in your personal life, right? If in future you are willing to visit a country, what you have to have an idea about FEMA, right? Because you have to exchange your Indian currency into a foreign exchange, right? Then only you can visit over there, right? For exchanging that currency, you require to follow what? Norms of FEMA, right? If you want to go and get into a kind of employment after completing your CS overseas, for getting into emigration or for getting into other formalities pertaining to your employment, what do you have to follow? FEMA, right? Because every now and then, if you are getting into a cross-border transaction, you have to comply with the requirement of FEMA whenever any transaction over here in India, even if you're donating certain sum of money overseas, if it involves what, students, if it involves foreign exchange, you have to comply with what? FEMA. So there is a clear incidence. If any transaction is pertaining to what, is related to what, foreign exchange, that will requires what? Compliance of FEMA, right? Even if you are earning foreign exchange, you have to follow FEMA because you are going to get the foreign exchange, right? If you are spending foreign exchange, what do you have to do? You have to follow FEMA, right? whether it is income expenditure, whether it is in the form of investment, whether it is capital account transaction, or it is a current account transaction. Wherever there is an involvement of what, students, foreign exchange, there would be an involvement of what, FEMA. And when it comes to company secretary, logically we know that many of the Indian companies are now getting into opening their own branches or business units overseas, right? So if in future you are going to employed by a MNC, that is multinational company, or a company which is located over here in India and willing to open their branch office overseas, what do you have to follow? FEMA, right? If your directors are going for a visit overseas for attending a business conference, what do you have to follow? FEMA, right? Right, students. So where there is a foreign exchange, there is a FEMA. Got my point, students? Done. So when it comes to FEMA, FEMA regulates the current account transaction, it regulates the capital account transaction, it regulates even recovery of export proceeds. See, when it comes to Indian economy, we will go and check the balance sheet of Indian government. We will got to know that foreign exchange reserve is a kind of asset for the Indian government, right? Right, students. Like for me being an individual, my bank balance is my asset, right? My whatever ornament or valuable metal I am owning, whatever property I am owning, that will come under the head asset side of the balance sheet, right? In the same way, when it comes to investment in foreign exchange, India requires foreign exchange, right? Because our imports are quite higher than our exports, right? We are so much dependent for so many commodities, like for oil, we are totally dependent on them, right? On foreign people, right? We don't have any source of oil, right? Right, students. So we are importing it, and oil is a kind of commodity which is quite very essential for all the industries, right? Right, students. Petroleum and petrol related products, right? So we are dependent on them, we have to pay their bills, right? So we have to keep certain reserves of foreign exchanges with us, right? But as our export earnings are less and import expenditures are more, what was my last line? What was my last line? Why you are not in the class? Yeah, what I was explaining, I was explaining about the balance sheet of government, right? When it comes to balance sheet of government, do our government has to keep foreign exchange reserves with us? Yes, right? Because what we have to do, we have to pay foreign bills, right? Whenever we are importing, they are sending us a bill. Now pay that bill in their currency, not in Indian currency, right? So we have to keep the reserves, right? Like I have to maintain my bank balance because I have to bills to pay, right? I am having bills to pay, right? If I do not have bank balance, can I survive? Answer would be no. So if the government would have no foreign exchange reserves, can you think that this economy can survive? No. They have to maintain foreign exchange reserves, right? So how they are taking that foreign exchange reserve? See, we have to borrow funds, right? Because we are not capable enough to earn foreign exchange, right? We have to borrow. In any case, we have to borrow, right? Because we are having more imports, less exports, so we are having negative foreign exchange earning, right? We are into foreign exchange losses, right? So meet out with our requirement, what we have to do, we have to borrow foreign exchange, right? So as we borrow foreign exchange, it will create a kind of interest burden on us, right? As we are borrowing, we have to pay interest to them. So now if you'll go through with section 8 or 9 of FEMA, no, you'll get to know that FEMA is putting statutory obligation on each and every individual, each and every person who is resident of India. It is our statutory duty. If some foreign exchange is being earned by us by exporting our goods or services, that is our statutory duty, that to recover it, realize it without unnecessary delay, okay, and remit back it to India, or repatriate back it to India as soon as possible. Yesterday I told you, right? What is the statutory duty of every resident of India, students? It is the statutory duty of every resident person of India that if they have earned any foreign exchange, what they have to do, they have to get it recovered or realized as soon as possible, and they need to get it repatriated over here in India as soon as possible, right? If in the future RBI realized that we are dragging the matter, we are not capable enough to realize the foreign exchange due to us as soon as possible, there would be a case registered by our RBI against us that we have contravened the statutory duty imposed on us. Got my point? Why this is statutory duty? That is my money, it's up to me. I can extend any days of credit to them, right? It's up to me, because I have to increase my sales. No, in any case I have to increase my export if I want to earn financial returns, right? But I am not being provided with the flexibility. The credit period is going to be regulated by whom? FEMA. Got my point, student? It is going to be regulated by whom? RBI, right? So when it comes to export recovery, who is putting condition on export recovery? RBI. What they are saying, if you are exporting, that is well and good, we are going to incentivize your exports, we are not going to charge any taxes upon you, right? But what you have to do, you have to get it realized as soon as possible, right? If you will drag the matter, if you will not realize on time, it will lead to what? Contravention of FEMA. Got my point, students? So how many topics being covered? 3 topics. The first one is current account transaction. They are which kind of transaction? Routine transaction, not creating any asset or liability overseas, right? Capital account transaction lead to creation of asset or liability, right? The third one is what? Third one is recovery of export proceeds, right? The fourth one is authorized person. When it comes to authorized person, they are nothing more than a kind of bank, offshore banking unit, money changer, means those kind of person which is being licensed or authorized by Reserve Bank of India, who are allowed to deal in foreign exchange. Can you deal in foreign exchange? No. Can I deal in foreign exchange? No, right? In India, when it comes to foreign exchange can only be dealt in by whom? The authorized person. And who can become an authorized person? Generally bank, public financial institutions, NBFCs, okay? Those who are being permitted by Reserve Bank of India in writing that you are allowed to deal in foreign exchange or foreign security will be treated as what, students? They will be treated as what? They'll be treated as what? Authorized person. Got my point? Section 10 is pertaining to what? Licensing of authorized person. Got my point, student? And the last thing is, I told you very clearly, FERA was having a problem. FERA was not FERA has not created a kind of special court or a special authority, as there is a special authority created by FEMA, which is only going to deal with the matters related with FEMA. Nowadays, if you have committed any contravention of FEMA, you need not to approach an ordinary court, okay? The authority will approach, a special authority will approach you, they'll penalize you, they'll punish you, right? And the entire proceeding will be taken care by the special authorities formed under FEMA. Got my point, students? So how many topics are there when it comes to FEMA? The first one is current account transaction, defined in section 5. Okay, capital account transaction defined in section 6. It is defined in section 2 but regulated by section 5 and 6. Okay, the third one is what? The third one is recovery of export proceeds. Are you being provided with a freedom to determine your credit period when it comes to export? Answer would be no. You are not free to determine your own credit period. Who is going to determine it? Is RBI, right? The next one is what? Authorized person. What is authorized person, students? The person permitted to deal in foreign exchange and foreign security. The next one is, got my point, students? Done. So we have done with 3 topics. Yesterday I have covered. The first one is why FEMA is being launched in place of FERA, right? The reason behind changing of FERA to FEMA, right? The second question that I have done, what is the basic or a important or a significant point of differences when it comes to FERA and FEMA? This question has been asked by CA Institute, not by CS Institute. The third question that I have covered is subject matter of FEMA, right? Up now, if you want to become expert in any law, okay, you cannot become expert in any law by studying the enactment, right? Whenever we are talking about law is a wide term which includes original law and delegated law. What it includes, students? Original and delegated laws. Okay, so whenever I am talking about original law, what is original law about? It is about an act. Okay, if I am pursuing a chartered accountancy course, or I am pursuing CMA course, okay, that is cost and management accountancy course, okay. Have you ever seen in their syllabus even there is a room for corporate laws, right? Corporate laws are being covered in their syllabus as well, but there should be some kind of difference when it comes to company secretary studying company law and a chartered accountant studying the company law, right? When it comes to chartered accountancy, what they are covering, they are only covering the enactment, they are only covering the act, they are only covering the basic document. But when it comes to CS students, what we have to cover, we have to cover the act, we have to cover the standards issued by CA Institute, CS Institute. We have to cover the rules that has been made by the central government, right? We have to cover the regulation that has been passed under company law by, RBI or by SEBI, okay? We have to cover the notification and circulars that has been issued by Ministry of Corporate Affairs, okay? We have to refer the judicial pronouncements as well, that is past judgments that has been given by the Indian court or court of UK, means English courts, right? So we have to cover multiple documents if we want to become expert in law. So whenever I'm talking about company law, I'm talking about 6 documents. I'm not talking about one single document, okay? If I'm studying an enactment, can I be expert in that subject matter? No, that will be a primary understanding about the subject matter. But if you want to get into in-depth understanding of the subject matter, you have to refer the various documents, and the various documents can be classified into 3 parts. The first one is original law, that is called act, right? The second one is known as what? The delegated laws, known as rules, regulations, okay, circulars, notifications, etc. And the third document is known as standards, right? That has been issued by the regulatory bodies, okay, like ICAI is authorized to issue accounting standard. Do you have to prepare financial statement according to accounting standard? Answer would be yes. Where it has been written, it has been written in section 129 of Companies Act 2013 that if you are preparing and presenting the financial statement of the company along with complying the requirement of company law, you have to comply with the requirement of accounting standard. If you fail to comply with the accounting standard, it will lead to contravention of section 129 and 1 year imprisonment is being provided. So can I say that by promulgating, by launching section 129, by putting this provision, now they are giving the status of law to the standards, right? Right, students? Because if you are contravening the provision of standard, it will be equivalent to contravention of law, right? Right, students? So here, even FEMA is there in CA final. It was there in the old syllabus FEMA. But what is the basic difference between their coverage and our coverage? They are only including FEMA 1999. And what we are going to cover? We are going to cover act, rules, regulations, circulars, right? And judicial pronouncements. Got my point? So whenever we are talking about FEMA 1999, when we will talk about the regulatory framework, it definitely includes FEMA 1999. Then you have to refer the 7 rules that has been made by central government. How many rules? How many rules? 7 rules that has been made by central government. 22 regulations that has been made by whom? RBI, Reserve Bank of India. And after that, you have to even read and go through with the recent publications of RBI, Reserve Bank of India, pertaining to FEMA, and you have to refer the judicial pronouncements as well. Okay, so that is the basic difference between law and an enactment. Okay, so I'm not going to teach you FEMA Act 1999, right? I'm going to teach you FEMA law, right? Right, students? Done with the point? That is what regulatory framework. Got my point, students? Objective of FEMA I have covered. Now the definitions we have done with certain definitions. When it comes to authorized person, I told you what is authorized person, right? Then when it comes to currency notes, they are defining the term currency notes. Why they are defining? Because they want to tell you, when we are talking about currency notes includes paper currency and it includes coins as well. So even if in India you are dealing in foreign exchange which is being depicted or represented in terms of foreign coins, you have to follow what? FEMA. Okay, either you, generally people are dealing through paper currency, right? But can you deal in foreign coins? Okay, foreign coins without complying with the requirement of FEMA? Answer would be no, because they are covering within the definition of currency notes what coins as well. Okay, so even if you are dealing in foreign coins, it will come under the definition of currency notes. Okay, done, students. Next one is then I have explained the difference between foreign exchange and foreign security, right? Even I have given you a clear idea how to write the answer, because it's all about how you are presenting your answers. I have written this answer for you, students, right? Then I have taught you the definition of person. Then I have taught you the definition of repatriation to India. What is repatriation to India? Repatriation to India means it is the statutory obligation of every person who is resident of India to realize as soon as possible all foreign dues, right? I told you, right? If you are a resident of India, what you are resident of India. If you are a resident of India, you are an individual, or you are a firm, or you are a company, or you are a body corporate, or you are a special company, it doesn't matter. If you are exporting, what you are creating a kind of asset overseas, right? What you are going to realize? You are going to realize foreign exchange, right? Because you are exporting, so they are going to pay you, right? Right, students? So what is your statutory duty? You have to realize it as soon as possible. You have to repatriate it over here in India without unnecessary delay, right? And if you cannot repatriate, you have to surrender it as soon as possible. Okay, that is whose duty? It is the duty of resident of India, right? It doesn't matter whether you are individual, or you are a firm, or you are a company, right? Because person is a wider term. It includes all kinds of persons, right? Right, students, done. So what do you mean by repatriation to India? Repatriation to India means you have made the foreign currency available to Reserve Bank of India. Okay, what is repatriation to India? You have sent the currency over here in India. So how you can send it? So first thing that you can do for repatriation is you can come over here in India with the foreign exchange. You can surrender that foreign exchange to the authorized person, take back your Indian currency and leave. That is called repatriation, right? What is repatriation or surrender, students? That is what you have come over here in India with the realized foreign exchange, right? Now, nowadays, how the people can come with the foreign exchange in hard copy, right? They have to through the banking channel, right? They'll receive the foreign exchange, right? So the first thing is what you can come up with the foreign exchange. You can get it surrendered to the authorized person. You can take the Indian currency and it's done, right? You have repatriated back, right? Right, students? The second method is what? If you're not about to come over here in India, you are staying over there for a longer period of time, do one thing. You must have your own account with the authorized person, right? As you are dealing in foreign exchange, you must have what? Your own foreign exchange account. What do you have to do? You have to surrender your foreign exchange or deposit your foreign exchange in your authorized person's account. Okay? Okay, students, in your account that you have kept with the authorized person. That is the second method of what? Repatriation. And what is the third method of repatriation? Suppose I'm an exporter, okay, and I have created a bill of around 1 million US dollar overseas, okay, but I am having certain dues to pay over there, right? Like my agents are there, my employees are there, I took certain kind of loan from there, right? So anyhow I have to pay that amount over there, right? Right, students? I have to pay that amount over there, right? So if I have cleared my dues or loans over there, even that clearance of loans and dues will also be treated as what, student? Repatriation to India. Got my point? So how many methods are there when it comes to repatriation of foreign exchange over here in India? Three methods. One is surrender and take the Indian currency, right? The second, get it deposited in bank account, right? And the third one is what? Got my point, students? Done. So that was, I think, no, the last is special director, right? Last definition that I have covered was a special director. So whenever it comes to special director, students, they are the judicial bodies. What kind of bodies they are? Judicial. What is judicial body? Means they are going to resolve the disputes, right? Right, students? What is the task of judicial authority? What the courts are doing? They are resolving the disputes, right? They are entertaining the contraventions. They are resolving the complaints. They are resolving the grievances. That is the role of judicial body, right? So nowadays, if you will contravene any provision of FEMA, who is going to give you a summon or penalty imposition, who is going to give you an order? Local police? Answer would be no. The order will be given by whom? Adjudicating authorities. Who will give you an order? Adjudicating authorities that has been appointed under FEMA. They may be an ordinary police notified by state government. It's up to the state government who is going to act as an adjudicating authority under FEMA. Okay. So whomsoever has been designated as an adjudicating authority, they'll pass an order against you that you have not realized the foreign exchange, you have not surrendered the foreign exchange, or you have not take the efforts to realize and repatriate it back to India. Whatever contravention you have done, who is going to penalize you is adjudicating authority appointed under FEMA. Okay. Who is going to appoint the adjudicating authority? The central government. Who is going to appoint? Central government. Okay. So when the adjudicating authority will pass an order and you are unhappy or unsatisfied with the order, to whom you should approach? You should approach the special director's appeal. There is no need to approach High Court. There is no need to approach the Supreme Court. There is no need to approach the ordinary court, because there is a proper appellate authority established under this act, and that is known as what? Special director's appeal. Okay. Got my point, students? So this we have done from the point of view of exams, right? But what is the practical relevance of all the theories that we are studying? The practical relevance is, if you are getting into a foreign exchange transaction, don't forget to comply with the requirement of FEMA, right? If you will contravene the provision of FEMA, rule of constructive notice is applicable over here in India. Ignorance of law cannot be excused, right? Ignorance of law cannot be excused. You cannot say that as you are unable to afford a professional advice, you couldn't comply with the requirement of FEMA. That is your problem. If you're getting into any transaction involving foreign exchange, right, whether that transaction is a tactical or a routine nature transaction, or it is a long-term investment, it doesn't matter. If you're getting into a foreign transaction, the first and foremost book that you have to go through with is FEMA law, right? Right, students? Done. All the definition, all the subjective answer is a subject matter of examination. But what is the practical relevance? Practical relevance is, when it comes to FEMA, it is not a law, it is a facilitation, right? It is not a law. They are facilitating foreign trade through FEMA, right? Now the provision of FEMA are not regulatory in nature, they are facilitating in nature, right? They are supporting the people to increase the exports, they are supporting the people to go for foreign visit, they are supporting the people to come over here in India and increase the tourism income over here in India. Now the enactment, that is FEMA, is quite very user friendly, right? It is what kind of law, students? User friendly law. They're not trying to regulate or imposing penalties. Even in the differences point, I told you very clearly, FEMA is not directly imposing criminal punishment on contravener, right? What they are putting is civil punishments, right? Civil penalties, right? Civil prosecution will be initiated against a contravener, right? Right, students? So we have done with the quick revision of what? We have done with the quick revision of whatever is being taught yesterday, right? Right, students? I have tried my level best to connect with those students who were not present yesterday. Now we'll proceed further with the new concepts. Okay. Okay, students, start करते हैं. ठीक है? See, the next question for today is person resident of India. What I'm teaching you is, students, person resident of India, right? What I'm teaching you is person resident of India. Hope online students are getting everything. So when it comes to person resident of India, whenever we are talking about person resident of India, why they are defining the term person resident of India? They are defining it so that we can understand on whom the FEMA is putting the responsibilities, right? Right, students? Why they are defining it? They are defining it to clarify. If you will come under the definition or bracket of person resident of India, you are under a statutory obligation. A statutory obligation of what? Realization, repatriation, and surrender, right? Right? What do you have to do? You have to put all your efforts that you can put, right, to realize as soon as possible, to repatriate as soon as possible, and to surrender as soon as possible whatever foreign exchange that has been earned by you, right? Right, students? So what is person resident of India? So can I say that person resident of India includes an individual, right? It includes a firm, it includes a corporate body, right? Even it includes an association of person and body of individual, right? But when it comes to an individual, when it comes to person resident of India, I think the term, you, if you have gone through with taxation, have you done with your tax, right? So if you have done with your tax, you must have read with the person ordinary resident in India, not ordinary resident in India, right? And non-resident of India, right? So when it comes to residential status of an individual, it has been, or a person, it has been regulated by Income Tax Act 1961. But it is not solely regulated by Income Tax Act 1961, because it is also regulated by FEMA, right? So when it comes to FEMA, it clearly states that an individual will be treated as person resident of India if he stayed in the preceding financial year, if he stayed in preceding financial year, if he stayed in preceding financial year for minimum period of 183 days, minimum period of 183 days. See here what is written, it is written like more than 182 days, right? What they have written, students, more than 182 days means minimum how many days they have to stay over here in India is 183 days, right? Right, students? But in income tax it is 182 days, right? But here it is what, 183 days, right? So being an individual, if I want to be the resident of India, okay, if I want to be the resident of India under FEMA, how many days I have to stay? 183 days. Where, when in the preceding financial year, right? When in the preceding what would be the preceding financial year, students? We are staying in 23-24, right? Now March is going on, no? So current financial year is what, student? That is 23-24. So if I want to act as a resident of India for 23-24, I have to stay over here in India for minimum period of 183 days in 22-23, right? Right, students? Done. So what is person resident of India when it comes to an individual, right? When it comes to an individual, what is person resident of India? An individual will be treated as resident of India if he stayed over here in India for a period of 183 days, right? That can be continuous period, that can be periods with gaps, right? Right, I came over here in India, stayed for 3 months, then I left, then again I came, right? It doesn't matter, but how many days I have to stay over here in India is 183 days, right? Along with staying in India for 183 days, right? What I have to prove is that 183 days should be for the concerned preceding financial year, right? Right, students? Done. That is the first condition. Now coming to the second condition. See, when it comes to 183 days, it is probably the right thing that minimum 50% of the year you have to spend over here in India. If you have spent 50% of the entire year over here in India, it will be treated as you are the resident of this country, right? Right, students? But what happens if a person is leaving from India for a permanent employment overseas? See, if a person is leaving India in the preceding year, say 22-23, okay, in the March 23, he got an opportunity on 25th March that now he is going abroad for an uncertain period of time. Okay, he is going over there for business or he is going over there for employment. Do you think that he'll be classified as a person resident of India? Although he stayed almost 363 days over here in India, right? But he would not be classified as a person resident of India because he is about to leave India permanently for a permanent or for an uncertain period of time. Got my point, students? So this 183 days condition would not be applicable on a person who was ordinarily staying in India, but he left India in the preceding financial year for employment, for business, or for uncertain period. Got my point, students? In the same way, if a foreigner is coming over here in India in the preceding financial year, say on 25th March, okay, he could have stayed only for 5 days in the 6 days in the preceding financial year, but he came over here in India for employment or for business or for an uncertain period of time. Do you think that the condition of 183 will become relevant for him? No, because he is about to stay over here in India for an uncertain period of time, right? Right, students? So this 183 condition is not going to be applicable on two persons. Got my point, student? What I'm teaching you is definition of what? Person resident of India, right? Person resident of India can be an individual. Person resident of India can be a company. Person resident of India can be a HUF. person resident of India can be a firm, right? It can be an AOP, BOI. But for individual, what is the condition? Condition number 1, he must have stayed over here in India for minimum period of 183 days in the preceding financial year, right? Right? This is the basic condition. But this condition is not going to be applicable on a person who was the ordinary resident of India, but he left India in the preceding financial year for employment, business, or uncertain period, right? This condition is not going to be applicable on a person who is non-resident of India, who came over here in India, but could not stay for 183 days in the preceding financial year, but he came over here for employment, or for business, or for uncertain period. Got my point, students? Done. This is the criteria for whom, students? This is for natural person, right? For individual, right? But what about non-individual? If a company or a body corporate is duly registered under Indian company law, got my point? The second, the criteria of residential status for an artificial person, See, if a company has been registered over here in India, okay, it doesn't matter whether it is having a place of business over here in India or not. They might have registered over here in India and they are settled overseas. They are operating from other than a place other than Indian territory. In that case, they will, for the lifetime, they'll be treated as what, students? Resident of India. Got my point? For artificial person, can you count the day of stay? It is not possible, right, students? For non-natural person, what is the criteria? If it is registered and regulated by Indian law, it will always be a resident of India. Got my point, students? Done. The next one is, if you have opened a branch overseas, what you have done? You have opened a branch overseas. Okay, you have opened a branch overseas. Okay, you have opened a branch or administrative unit or a business place overseas, and it is going to be controlled from India. Although it is being located outside India, it will always be treated as what, student? Resident of India. Got my point? If they have opened the branches over here in India, if they have opened their branches over here in India, say Apple has opened their Apple store over here in India, okay, it is being located over here in India, but it is going to be controlled by them, right? Their rental, their employee salary is going to be paid by Apple from overseas, right? But still they'll come under the definition of what? Resident of India. Got my point, students? So what is the criteria? 4 criteria are there, right? The first one is for individual, right? The second one is for companies. The third one is for branch and offices, right? The first criteria states what? You have to stay over here in India for 180. If you stay over here in India for a minimum period of 183 days, you are resident of India. But you are not. If you left India after staying over here for more than 183 days, right? But you left India for employment, business, or for uncertain period, or you came over here in India, could not stay for 183 days, right? Could not stay for 183 days, but you came over here in India for employment, for business, for uncertain period. Got my point, students? The next one is for corporate. If you are registered and regulated by Indian law, you are, it doesn't matter where your business is located, right? If you are a place of business or a branch located over here in India, which is going to be controlled from outside India, still you are a resident of India. If you are a branch or a place of business is located outside India and going to be controlled by India, you are a resident of India. Got my point, students? This is the, and if you are a resident of India, what is your duty? Realize, repatriate, and surrender the foreign exchange, right? Whatever is being earned or whatever is not being earned, but you have taken it from authorized person, return it ASAP, because we are having deficiency of foreign exchange, right? Right, students? Done with the first topic of the lecture, that is what? Resident of India. Giving you 2 minutes time. Go through with the definition. If you find anything confusing or ambiguous, feel free to ask. Okay, same applicable to online students. If you are having any doubt, please put your doubts over messages. Okay, done, students? Go through with the definition. it's visible now. Should I zoom it? What I have done, I have written my own notes, but I am showing you the definition given in institute's study material. See, visible students, it is institute's study material. Okay. You have no, I have sent the soft copy. I have arranged to send that today's notes. No, go through with the institute study material. No, I have opened in the screen the institute study material. They have used this language. Okay. Done. Earlier definition. I have covered every aspect in short form. Right. Done, students. So done with person resident of India. Right. Now this is the next topic of today's lecture. This is about regulation and management of foreign exchange, right? And then we'll start with a very substantial part of the chapter, that is current account transaction. Okay, students. So if you'll go through with the chapter 2 of FEMA, what they have written, see. When it comes to foreign exchange, it is going to be regulated through FEMA by RBI, right? Who is going to regulate the foreign exchange over here in India is RBI under FEMA 1999, right? If you are not an authorized person, okay, and you are willing to transfer foreign exchange, what do you want to do? You want to transfer foreign exchange, okay? Or if you want to transfer foreign exchange or foreign security, or if you are willing to make the payment of foreign exchange, what you are willing to do? You are willing to transfer the foreign exchange or foreign security, okay? Or you are willing to make the payment of foreign exchange or foreign securities, okay? Okay, foreign exchange, right? Right, students. Or if you are willing to receive the foreign exchange by payment, what you are willing to receive? Foreign exchange payments, right? Or you are willing to receive foreign exchange payment on behalf of a person resident outside India. What you are willing to do? You are willing to make the payment, make the transfer of foreign exchange or foreign security. You are willing to make payment of foreign exchange, right? You are willing to receive the foreign exchange, right? Or you are willing to receive the foreign exchange on behalf of a person resident outside India. Means you are not accepting it, you are accepting on behalf of some third person, okay? Whatever you are doing, okay, whether you are making the payment or you are transferring the foreign exchange or you are receiving the payment or you are receiving the payment on behalf of third party, what do you have to do? You have to follow the FEMA regulations. Got my point? So FEMA is applicable when there is a transfer, right? Transfer of what, students? Transfer of foreign exchange or foreign security, right? There is a payment of foreign exchange, right? There is a receipt of foreign exchange. There is a receipt of foreign exchange on behalf of a person resident outside India, okay? If you're just acting as an agent, okay, one company has opened their license office over here in India and they have appointed me as an licensing agent. I'm an agent of them. I'm not going to receive, I am receiving their foreign exchange payments, but I'm not going to use it. I'm not going to use it for my own purpose. This is for the corporate, their own corporate purposes, right? Still, what I have to do, I have to follow the FEMA. Got my point, student? So FEMA is applicable when there is transfer, there is a payment, there is a receipt, or there is a receipt on behalf of a person resident outside India. Got my point, students? Done? Done. Even if you are getting into investment, inbound or outbound investment, what you have to follow is FEMA. Done? Done, students. Now going ahead with what, students? Current account transaction. I am starting with a very important part, that is current account transaction. We know what is current account transaction. The term current account transaction is being defined in section, it is being defined in section 2. Where it is defined, student? Section 2. Section 2 defines what? Current account transaction, right? Whenever it comes to current account transaction, yesterday only I have given you a clear meaning of current account transaction. Today in the revision even I have covered current account transaction. Current account transactions are those transactions which is not capital account transactions, right? A capital account transaction is a transaction which would lead to create an asset or liability located outside India and belonging to person resident of India. Dhyan se, huh? What is capital account transaction? Capital account transaction is a transaction which leads to create any asset or liability located outside India but belonging to person resident of India, right? That is a cross-border transaction. Or which leads to create asset or liability inside India, right? Located inside India but belonging to person resident outside India, right? It will be classified as what? Current account transaction. So it is classified as a capital account transaction. Other than these transactions, all transactions are what? Current. So we can simplify when it comes to current account transaction. If a foreign party has opened their place of business over here in India, they hired employee and they are paying salary to them. Payment of salary would not lead to creation of asset, right? It will be classified as a current account transaction. If they are coming for tourism, like Mark Zuckerberg came to Jamnagar for attending a wedding, now he is going to make certain expenses. That is a current account. That is not going to create an asset over here in India, right? Right, students? Done. If they are coming for tourism and they are spending over here in India, that is a current account transaction. If they came over here in India in Tata Memorial Hospital for cancer treatment, they came over here in India for cancer treatment, will it be classified as a capital account transaction? No, because this is not going to create any asset or liability. They have taken a loan from Indian Bank, will it be classified as a capital account? Yes, because they are taking a loan, so it will create a liability, right? Right, students? They have bought a flat over here in Mumbai, that is a capital account transaction, right? Right, student? They have came over here in India to attend IIM MBA. Okay, they are pursuing IIM MBA from IIM. That is a educational expenditure, right? Will it lead to creation of any asset or something? No, it's a current account transaction. Got my point? So education related expenditure is current account transaction. Medical treatment related expenditure is current account. Tour and travel related expenses are current account transactions, right? So if they are getting into current account transaction, section 5 regulates the current account transaction. Got my point, students? So now the FEMA, that is Reserve Bank of India, classifies the current account transaction into 3 categories. How many categories they have classified? 3 categories. How many categories, students? 3 categories. Category 1 is put in schedule 1. Category 2 is put in schedule 2 and category 3 is put in schedule 3. Okay. How many schedules are there when it comes to current account transaction? The current account transaction is being classified in 3 different schedules. Schedule 1 states those current account transactions which are prohibited from India. Okay. You cannot get into these transactions. They are what? Prohibited current account transaction. How they have classified the current account transaction? Into 3 categories. Category 1, that is came under schedule 1, that is a prohibited current account transaction. You cannot get into such kind of current account transaction. If you will get into such kind of current account transaction, that will be a punishable offense. Okay. Which kind of transactions they are? Prohibited current account transaction. Which kind of transactions they are? What I'm teaching you is current account transaction. Which section we are pursuing? Section 2. Read with section 5, right? Section 2 is definition of current account transaction. Section 5 is what? Regulation of current. According to section 5, the entire current account transaction has been segmented into 3 parts, right? The first one is what? Prohibited, provided in schedule 1. Provided in schedule 1. If even you have your own self-earned foreign exchange, okay, if even you have earned your own foreign exchange, suppose I went overseas, okay, I have performed certain assignments and I have earned remuneration in dollars and I have kept it with me because that's my money, right? I have kept it in bank account. Can I use that funds for schedule 1 transaction? Answer would be no. Such kind of transactions are not at all allowed by whom? Reserve Bank of India to perform. If you are using any foreign exchange for schedule 1 transaction, that will be a punishable offense because they are absolutely which kind of transactions, students? Prohibited. What kind of transactions they are? Prohibited. Okay. Now schedule 2 is talking about permissible current account transaction. It is talking about what? Energy, student. It is talking about what? Permissible capital account transactions, permissible current account transactions with the approval of government of India. With the approval of government means if you want to get into the transactions laid down in schedule 2, what do you have to do? You have to take the approval of Government of India. You have to take the approval of Government of India. Okay. Now Schedule 3 is dealing with list of current account transaction for which it requires approval of Reserve Bank of India. It requires what? Approval of Reserve Bank of India. Got my point, students? What I'm teaching you is current account transaction. Where it has been defined? Where it has been defined? Where it has been defined? Section 2. What is current account transaction? Which is not a capital, which is not leading to create any asset or liabilities overseas belonging to person resident of India, inside India belonging to person resident outside India, right? Routine nature ke all transaction will be classified as a current. Give me example of 7-8 current account transaction. Export and import is current account transaction. Payment of interest for loan is a current account transaction. Payment of dividend out of investments made by them is a current account transaction. They are business nature transactions, right? Tourism, travel is a current account transaction. Medical treatment is a current account transaction. Educational expenditure is a current account transaction. Gift and donation is a current account transactions, right? So the entire segment of current account transaction is being classified into, it's been classified into 3 categories. You will categorize it. Tell me the categories. What is Schedule 1? What is Schedule 1? It's prohibited, right? Can you get into Schedule 1 transactions? No. If you will get into Schedule 1 transaction, it will be what? It's a contravention, right? It is a subject matter of punishment. You are not allowed to do it. Any guesses which kind of transaction it will cover? I think gambling related transaction, betting, racing, riding, lottery, right? If you are getting into, if suppose a person came over here in India and he bought a lottery from a state, say Maharashtra, okay, they bought a lottery, they won that lottery, okay, in that situation, can you pay that lottery amount to that person in foreign exchange because he is not resident over here in India? After winning the lottery, he is leaving India and he is asking you to make the payment of winning amount in dollars. Can you pay him? And although we are facing the deficiency of foreign exchange, do you think that RBI will allow us to make him the payment in foreign exchange? If he want to enjoy the lottery winning amount, what he should do, he should stay over here in India. He can ask for the Indian currency. We can make the payment in Indian currency, but we cannot make payment in foreign exchange, right? That is a kind of prohibited transactions, right? Right, students? If they played the game, that is KBC, and he won that amount, say 3,40,000 or whatsoever amount he has won, he can enjoy that amount in Indian currency, but what you cannot pay him is foreign exchange. Got my point? So these are categorized as prohibited transaction provided in Schedule 1. Provided, yes. Yeah, it's certain, it is a lottery is a subject matter of state laws, okay? Certain state permits lotteries and certain state prohibit it, right? But when it comes to winning amount, can that winning amount be paid in foreign exchange? Is it possible? Do we have so much of foreign exchange that such kind of casual income can be paid out of US dollar or in terms of a US dollar? Answer would be no. It is a subject matter of FEMA. FEMA states very clearly, if you want to pay him the winning amount, say if he has betted or he get into kind of racing game, okay, and he won the amount, can you deny him to pay that amount? No, you cannot. You are statutory under obligation to make the payment of that amount, but you can make the payment in Indian currency. What you cannot do is make the payment in foreign exchange. Got my point? Got my point? That is a prohibited category of what? Transactions, right? The second one is what? Permissible with the Government of India approval. It is not being covered in your syllabus. Schedule 2 is being excluded from your syllabus. Now Schedule 3 is what? Permissible with the approval of Reserve Bank of India. Got my point, students? Done. So here it is written, when it comes to drawal of foreign exchange, what it comes to drawal of foreign exchange means you are using the foreign exchange. How you can use the foreign exchange, students? There are certain methods, like you can use the foreign exchange in hard currency when you will approach the authorized person, surrender Indian currency and ask for foreign exchange, right? That is the first method. And second method would be what? You can swipe the cards, right? you have an international card, right? You have an international debit card, credit card, ATM card, right? And you have swiped over that. That is also treated as what, students? Travel, right? You have gone there over over there with traveler's check. Utilization of that traveling check is also what? Drawal of foreign exchange, right, students? Even you can make the payment through IMPS, NEFT, whatsoever. NEFT cannot be utilized. UPI, if you have made UPI payment over there, that will also be treated as what, students? Utilization or drawal. Got my point? So drawal can be in the form of exchange of currency. Drawal can be in the form of swiping the debit card, credit card, or ATM card. Or drawal can be in the form of using the traveler's check or making payment through any banking channel, right? Right, students? Done my done with the point. What I'm teaching you is current account transactions, right? First, I have given the meaning of current account transaction defined in section 2, right? Then it is being regulated by section 5. 5 classifies the current account transaction into 3 categories. Prohibited, don't get into it, you will be punished, right? Get into it with the approval of Government of India. Get into it with the approval of RBI, right? Right. Schedule 1, the transaction pertaining to Schedule 1 is absolutely prohibited if you are having balance in your bank account in terms of foreign exchange. Can you use that foreign exchange for Schedule 1 transaction? Answer would be no, right? But if you are having bank balance, okay, in foreign exchange, I can have RFC account over here in India. What is RFC account? That is a resident foreign currency account. What is RFC account? Resident foreign currency account. Suppose I am an exporter and I am earning in foreign exchange. I can keep that foreign exchange in my RFC account, that is known as resident foreign currency account. If I am having credit balance in my RFC account, which kind of balance? Credit balance means asset is there. Okay, I am having money in my account. Can I use it for Schedule 1 transaction? Answer would be no. But can I use it for Schedule 2 and Schedule 3 transaction? Answer would be yes. I need not to take approval of Government of India. I need not to take approval of RBI because that is my money. I can use it the way I want to use it. Got my point? Got my point, students? Tell me the last explanation. Again and again, I find it like you are distracted. Tell me what I have explained. Which all sections we have covered? Section 2, definition, right? Section 5, regulation. Section 5 divides the current account transaction into 3 categories. Category 1 is prohibited. Even if you are having a bank balance, can you use that money for Schedule 1 transaction? No. But if you are having balance in your RFC account, what is RFC account? Resident foreign currency account. What it means? That a resident has opened an account where he is going to deposit what, student? Foreign exchange, right? Can you use it for Schedule 2 and Schedule 3? Answer would be yes, right? Without taking the permissible approvals, right? Required approvals, right? Right, students? Done. Schedule 2. Now Schedule 1, see, this is the list of prohibited transaction. Can you see, students? Right. This is the one of the most important question that has been asked by institute many a times. List out the prohibited current account transaction as provided under FEMA. Okay, list out the prohibited transaction. So the first prohibited transaction is what? Winning from lotteries, right? Right, students? The first prohibited transaction is what? Winning from lottery. The second prohibited transaction is winning from racing, riding, betting, gambling, etc. Right? Right, students? Right? The third transaction is what? If you are making any income by selling lottery tickets, prescribed band and prescribed magazine, or any kind of casual source of income, okay, any kind of impermissible or illegitimate source of income, it is not permissible to be paid out of foreign exchange, right? How many transactions are prohibited? Around 7 transactions, right? Right, students? 7 transactions are prohibited transaction. The first one is, now how you can simplify it? You can say that, sir, if a foreigner wins lottery over here in India, we can pay him. We can definitely pay him, but in Indian money, not in foreign. If a foreigner earned through racing or riding income, that income will be definitely paid off, but through Indian currency, not with foreigner. The third one is, if any foreigner has earned by way of selling the lottery ticket over here in India, by sale or purchase of lottery ticket over here in India, certain banned and prescribed magazines over here in India, such kind of not a normal income can be paid out of Indian currency, cannot be paid in foreign exchange, right? Right, students? Which schedule we are going through with this? Schedule 1, right? The fourth one is what? The fourth one is stating that if you are willing to make a payment of commission on export made through equity investment in joint venture or wholly owned subsidiary abroad of Indian companies. Suppose, see, every Indian party is willing to get into a business of exports, right? Because exports earning is having a huge potential, right? Right, students? So what you have done, you have set up your own business unit over here, over there, okay? And what you are doing, that is your wholly owned subsidiary or joint venture business. What they are doing, they are picking up the orders from there and giving it to you. And what you are doing, you are willing to pay commission to your own established agents. What you have done, suppose I have opened my firm over there in Dubai, okay? And now what that firm is doing, I am making investment in that firm, okay? And what they are doing, they are acquiring Dubai client and passing out on to us. So they are generating revenue for us, right? They are generating export revenues for us, right? And what we are showing, they are not our entities. They are although owned by us, but they are separate legal entity. And for acquiring the exports order, we are willing to pay them the commission. So government will say, pay the commission in Indian currency. Now, although they are owned by you, right? They are your own joint venture. They are your own wholly owned subsidiary. Why you are willing to pay them commission in US dollars or in dirham or in dinar, right? You have to pay them in Indian currency. Got my point, students? So how many points are being covered? 4. The first one is lottery winning. The second one is gambling, betting, racing, riding, right? The next one is income generated from sale or purchase of lottery tickets and banned vaccines. The next one is you are willing to pay the commission on equity investment to the wholly owned subsidiary or joint venture located outside India, right? Right, students? The next one is if you are willing to make payment for callback services. If you are willing to make payment for, see, sometimes, Indian party has to get into conference calls with the foreign parties. But if you'll go ahead with ISD calls, now they are quite very expensive, right, students? International calling rates are very high. So sometimes what you do, you appoint a callback service agent, okay, who will arrange callback for you so that you need not to pay the big bills, okay, big telephone bills, okay? You have appointed an agent. You said that we are not going to make a conference call of hours, okay, by using ISD services of Indian telecommunication services. That will be quite very unaffordable for us. We have to get into meeting with the consultancy companies or clients over there, and the calls will end for hours and the bill amount will be quite very huge, okay? So in that case, if you have appointed an agent who will arrange a callback from them, okay, and bear the small bills, okay, will charge you a small amount, okay, that is known as what, student? Callback services. What is callback services? What is callback services? Suppose Indian TCS is extending engineering services to them, okay? For that, they have to get into a team call, okay, for a period of say 8 or 9 hours of office every day. If it will be through ISD method, you can understand what kind of bill the TCS has to pay over here in India, right? So what TCS has done, they have appointed an agent who will organize what, student? A callback services, okay, from US clients, okay? In that case, you have to pay for that callback services a nominal amount, and that amount cannot be withdrawn from RBI. Either pay it in Indian currency or don't pay it, right? RBI would not allow you to make any withdrawal for callback services. Got my point, students? How many points are being covered? 5 points, right? They are which kind of transactions, students? Energy, which kind of transaction it is? It is prohibited service, prohibited transactions, right? The first one is, the second one is, the third one is energy, the third one is, the fourth one is The next one is callback services, right? Now, if a foreigner came over here in India and he has opened an account with an authorized person that I am going to hold my Indian currency over here in India. Okay, what he has done, he has came over here in India. He has opened an Indian currency account. Which account? Special rupee account of an NRI, non-resident of India, has opened a bank account where he is keeping what? His Indian currency, say 1 crore, 2 crore, 3 crore, right? So whatever amount that will be due as an interest on that amount will only be paid in Indian currency. That cannot be paid in foreign. You are holding what? Indian currency over here in India. So interest of it can only be paid out of Indian currency. It cannot be paid in US. You cannot say that you are earning in Indian rupees and we need to get it converted into foreign exchange and will pay you the interest in dollars. That is not possible. So any interest that is payable on NRI rupee account, special rupee account, cannot be paid in foreign exchange. Done. How many transactions we have covered? I think 6 or 7, right? The first one is lottery winning. The third one is gaming, betting, gambling, right? Racing, riding. Next, purchase and sale of lottery tickets and magazines. Then commission on equity exports, right? The next one is callback services. The next one is interest on a special rupee account of NRI, right? Right, students? Now, if you're getting into an export, the last point, if you're getting into exports, what kind of revenue you are expecting? You are expecting revenue in terms of what, students? Foreign exchange, right? But you have exported something from India and you are going to get the payment through rupee. What you have done? You have exported outside India. What you have done? You have exported outside India. In which currency you should get your payment? In foreign exchange, right? But you have used the rupee credit route. Which route you have used, students? Rupee credit route. Means the bills are going to be paid in Indian currency, Indian rupees. Okay. So in that case, if you're willing to make payment of any commission on such exports, you cannot pay it in foreign exchange. You have to pay it in Indian currency. But if you have exported tea or tobacco, you can pay commission up to 10%. You can pay commission up to 10%. Got my point, students? If you did not get any point, B means ask the same. Okay, how many points are there? 7 points are there. Okay, so what is written in schedule 1? Schedule 1 clearly states that 7 transactions are list of prohibited transaction. You cannot get into such kind of transactions. If you'll get into such kind of transaction and using what? Foreign exchange, that will be a punishable offense, right? That is not at all permissible. A contravention will be booked against you. Even one more transaction they have included very clearly. If you're dealing with Nepal and Bhutan, if you're dealing with Nepal or Bhutan, or if you are dealing with any person who is resident of Nepal and Bhutan, use Indian currency, you will not be provided with their currency. Got my point, students? For Nepal and Bhutan, even this restriction is applicable. So how many transactions are prohibited? 8 transactions are prohibited. Got my point, students? Done. Go through. Okay, students, we have done with what? Schedule 1, right? Is it visible or should I zoom it? Yes. See, what you have done? You have made exports from India. If you're making exports from India, there are 2 routes. One route is you're going to receive the payment in foreign exchange. So if you're going to receive the payment in foreign exchange, there is no worry. You can pay commission on such kind of exports, because whomsoever agent who have provided you with that kind of export order is eligible to get the commission, right? But yeah, see, if you want to export outside India, you need some or other agent over there who is there to promote your product or brand, right? So that agent is bringing what? Order for you, and because of that orders, what you are doing? You are paying him commission, right? Logical, right? Now whatever export order he brought in, it was through rupee route. Rupee route means payment is going to be received in Indian currency, not going to be received in foreign exchange. In that case, as you are going to get the payment in Indian currency, will you be allowed to pay commission on foreign exchange? Answer would be no. But if you are going to get the payment in foreign exchange, do you are you being allowed to pay the commission in foreign exchange? Answer would be yes, because you are going to earn foreign exchange, right? Here through this exports you are not going to earn the foreign exchange. Got my point, students? Done. And the next point is, but for tea and tobacco they have laid in a specification what, that you can pay commission up to 10%, right? Right, students, of the invoice value. Done. Done, students. Done with what? Schedule 1. Which kind of transactions they are prohibited. Done. Now I told you about schedule 2 and schedule 3 as well, right? Right, students? Go through. Gift is a current account transaction. Tell me first of all, when it comes to gift, will it lead to creation of any asset outside India? If you are gifting some amount to a person resident outside India, will it create any kind of asset or liability overseas? Will it create? No. So over here in India, so it will not lead to create any kind of asset. What kind of asset will be created? Suppose they have gifted some amount to ISKCON temple, right? ISKCON is getting so many foreign contributions from overseas, right? And suppose they have sent around 2, 3, 5 crore rupees to them, okay, when translated into Indian currency, okay. What the ISKCON will do? ISKCON will buy a land of rupees 5 crore and get it registered with their own name, right? Because that is a gifting amount, right? It is not going to buy a land with the name of the donor, right? So it is not going to lead an asset over here in India, right? It is just a gift amount. Got my point? So that is why it is a current account transaction. Done. Done, students. So how many schedules are there? 3 schedules are there. You are going to revise entire topic of current account transaction. Yeah, with a very loud voice and a very clear explanation, okay? Hmm. Hmm. Under section 5, yeah, there are 3 schedules. Yes, certain transactions. Hmm. Hmm. Very nice. Next, if a foreigner will win lottery over here in India, he is not allowed to get the payment in foreign exchange. Make it simple, right? If they'll win KBC, will they be allowed to get the payment in foreign exchange? Answer would be no. It's a gaming, right? If they'll win a race or a betting, will they be allowed to get the gift amount or winning amount? Yes, in Indian currency, not in. Next, if you have settled your own joint venture or wholly owned subsidiary over there, what they are doing, they are promoting your product or exports, right? And you are willing to make them payment of commission, although they are there, they are only your limbs, right? Part of your own management, right? It is not allowed to draw foreign exchange. Next, commission on exports made under state rupee credit route, right? Where the payment is going to be received in rupees, not in foreign exchange. You cannot pay commission on such kind of exports using foreign exchange, right? Then, but you can pay commission for tea and tobacco up to 10% of invoice value. Next, callback services. Next, any transaction that is going to be executed with a person who is resident of Nepal or Bhutan, right? Even if the person who is under an obligation to make payment is having balance in his own RFC account, he was having his own self-earned foreign exchange, will he be allowed to use that fund? No. Can he make the payment by using card? No, because that is a drawal, right? Can he make the payment by using credit card? Answer would be no. Can he be able to make the payment by using traveler's check? Answer would be no. Can he be able to transfer his deposit that is there in his own bank account? Answer would be no. Not at all allowed. He cannot use even a single dollar for these transactions, right? Right, students? Done. Schedule 2, I told you very clearly that requires Government of India's approval, but it has not been there in your syllabus. But now part 3 transactions are there. Okay, part 3, that is schedule 3 transactions are there, which requires what, beta? RBI approval, right? So that, I think, should I give the break now? You need break now? Should I give break now? It's 5:45. So giving you 10 minutes break. After that, what I'll do, I'll start with the remaining part of the current account transaction. Okay, students. So done with how many questions today in the class? The first question is what? What is person resident of India? Right. What was the second question? What is current account transaction and their schedules? 1, 2, 3. Right. The what we have done it in yesterday's lecture, right? Regulatory framework. The next thing, prohibited current account transaction, right? We have done with 3 topics, right? Done, students.